Here's all you need to know going into this week of trading. The market is riding a wave of record highs, but a closer look at the data shows a fascinating and potentially profitable paradox. Now, let's break that down, what you need to know to navigate this trading week ahead. The big picture is undeniably bullish. Both the S&P 500 and the Nasdaq have recently notched new all-time highs, signaling a robust market uptrend. In fact, August was another strong month for stocks, with the S&P 500 rising over 2% and Nasdaq up over 1.6%. This is the kind of momentum that has investors feeling very confident, especially since the market's overall exposure level is currently at a high 80 to 100%. But don't let those headlines fool you. The market uptrend is also described as being under pressure. We're seeing an increased number of distribution days. That's when the market sells off on heavy volume, which is a sign of institutional selling and suggests that the rally is not without its risks. This week's trading will be dominated by a classic market paradox. The August jobs report came in weak, showing a gain of just 22,000 non-farm payrolls, well below expectations. But the old trading adage goes, bad news is good news in this environment. The weak jobs report lowers the pressure on inflation, which in turn strengthens the case for the Federal Reserve to cut interest rates at its September 17th meeting. This week, the market will be hanging on every word from Federal Reserve and every piece of inflation data. We have the Producer Price Index, or PPI, arriving on Wednesday, and the all-important Core Consumer Price Index, or Core CPI, on Thursday. These reports are critical because they will be fed directly into the Fed's primary inflation gauge, influencing the decision on rate cut. Now, beyond the Fed, we're seeing a significant rotation in the market leadership. While the big tech names have dominated, August saw small cap and value funds outpace their larger, flashier counterparts. The Russell 2000 small cap index surged 7% for the month. And in a clear sign of growing caution, gold prices hit an all-time high, with precious metals funds up nearly 80% year to date. Now, this tells us that money is flowing into a wider array of sectors, and that investors are starting to look for hedges against economic uncertainty. Your playbook for the week is clear. Watch the inflation data, monitor the Fed signals, and be prepared for volatility from the Goldman Sachs Communacopia Conference, where leaders from companies like Alphabet and Netflix are scheduled to speak. That's your market rundown for this week. Mr. M out.